Good morning, everybody. It is Wednesday, June 22nd, 5:43 a.m. Central Time as I speak here. December corn futures down 3.25 at 698.25. November soybeans down 23.25 at 1487.25. September Chicago wheat up 11 cents at 998.25. September Kansas City wheat up 8.25 at 1056.5. September spring wheat up 1.75 at 1119.75. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, guys, like, subscribe, leave me a comment, give me a crop update, let me know what's going on in your neighborhood. If you'd like some additional information from me, as always, guys, go to my website, www.standardgrain.com. Check out my premium subscription service today. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central these days. That email includes every overnight headline you need to be aware of, charts, graphics, weather info, all of my grain marketing recommendations. My subscriber-only videos are part of this. I did one yesterday regarding soybean seasonals and specifically years in which new crop soybeans trade $13 or better during the summer. There's only a handful of years like this, and I wanted to do kind of a different seasonal study of just these high-priced years. Again, if you guys are interested in this premium content, sign up today. It's $50 a month. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else, I promise. U.S. corn and soybean conditions declined last week. We'll start off with corn. The corn crop rated 70% good to excellent, down from 72 the prior week, still above the 67% average. This was largely expected. The trade expected a 1 or 2% decline in the good to excellent category. States with the good to excellent rating of 65% or worse, so these are kind of your poorer states in terms of ratings. Minnesota, Ohio, North Carolina, Texas, Colorado, and Kansas. Those states are all 65% good to excellent or worse. Iowa is perhaps the best of the big corn growing states. They are 83% good to excellent. Very, very strong rating in Iowa. The corn crop is 95% emerged nationally versus 88 last week, 95 on average. U.S. soybean conditions also declined, 68% good to excellent, down from 70 last week, still above the 65% average in beans. Same deal here. States with good to excellent ratings, 65% or worse. These are your poorer states, relatively speaking. North Dakota, Kansas, Minnesota, Missouri, Michigan, Ohio, and North Carolina. The soybean crop is 83% emerged versus 70 last week, 84 on average. Winter wheat harvest moving ahead and is now ahead of its 5-year average. Crop is 25% harvested versus 10 last week, ahead of the 22% average. Much more activity noted in Kansas, especially. That state 27% harvested in regard to winter wheat, up from just 2 last week. States that are more than 70% done with harvest include Texas, Oklahoma, and Arkansas. The spring wheat crop rated 59% good to excellent. That was up 5 percentage points on the week from 54 last week, ahead of the 57% average. So spring wheat ratings creeping a little bit higher here. The U.S. Corn Belt mostly dry this morning. You've got some scattered rains over the, say, Iowa-Missouri border in this eastern section, not very much. Some scattered stuff over parts of Kansas, but a lot of the Corn Belt very much dry here this morning. Now, it's going to be hot again today, but this heat is going to go away. By the end of this week, you're going to see kind of like a cold air mass work its way into the northern plains. And the map on my screen is what's expected on Monday. This is temperature versus normal. So by Monday, say Sunday, Monday next week, a lot of the Corn Belt's going to be 10 to maybe even 15 degrees below normal, and it's going to be pretty widespread. So the heat is going away. That looks to be pretty much a guarantee here at this point. The question that I have is rainfall. There's really not a lot here in the forecast over the next 7 days. I mean, maybe parts of Iowa catch some rain, maybe parts of North Dakota, but a lot of the eastern Corn Belt dry, a lot of the plains dry. Just not any real widespread sweeping rains, and it really doesn't improve a whole lot when you go out to that like 6 to 10, 8 to 14. I mean, you're still talking below normal rainfall for a lot of areas. I looked at this morning's Euro run, and it offered really only scattered rains for the Corn Belt through July 1st. And then when you look at the GFS, which runs out a little bit longer, through the first week of July, like out through the 7th, the rains are still pretty spotty. And then in that 8 to 14 day period, maybe some heat comes back. So yeah, the heat for the moment, it goes away this weekend, but I still have questions about the rainfall here. I don't think this forecast is as bearish as maybe the market would have led you to believe yesterday. I mean, I understand that the heat's going away, but I still don't see the rainfall here in any widespread fashion at all, even out through the first week of July. So this weather thing is still up in the air. I know know the market was down yesterday. I know we were under pressure overnight at one point. I'm not sure if weather is the reason or not, but I'm not seeing the rains here in the forecast out through that first week in July. A Turkish military delegation will travel to Russia this week to discuss Ukrainian grain exports. These discussions, and this feels like same story, different day, I understand. These discussions will revolve around the possibility of a safe sea corridor in the Black Sea that would allow for the shipment of Ukrainian grain. Russian officials did confirm that the talks would take place. Reuters sources have also indicated that a four-way meeting between Turkey, Russia, Ukraine, and the United Nations may occur in Turkey in the coming weeks. The sources said that the plan involved creating 3 corridors from Ukraine's Odessa port under Kiev's supervision, and that both Ukrainian and Russian food products would be shipped. The sources indicating, or I guess this would be the best case scenario, 30 to 35 million metric tons of grain could be shipped from that area in the next 6 to 8 months. That is very wishful thinking, I think, at least in my opinion. If you're to be optimistic about this plan, you've probably got to be optimistic about Vladimir Putin and the idea that he has any sort of good intentions when it comes to food and trade and that sort of thing. Russia continues to just totally deny any responsibility for these lack of shipments, and they continue to blame Western sanctions. So Russia's playing along here and doing the meetings as they've been doing, but nothing has really changed. I don't know if anything will change. President Biden will ask Congress today to enact a federal gasoline tax holiday. I discussed this yesterday, but we have some more details here today. The news comes via anonymous sources, but this was reported by most of the major news wires late yesterday and into today. The federal gasoline tax is 18.4 cents per gallon. It's likely to be suspended. They're talking 3 months. I don't know when it starts or ends. Biden will also ask state lawmakers to cut or eliminate their respective taxes. So they're trying to reduce taxes in an effort to reduce gasoline prices, I guess. Biden recently downplayed concerns cited in regard to such a holiday, most notably the fact that these taxes are used to maintain roadways and infrastructure. The other criticism that I would have, I mean, this doesn't do anything to fix inflation. It probably just makes it worse. I mean, it may be good for you at the pump, but it's not going to help the market to serve its function, which is to reduce demand through higher prices. And I don't think that we've really seen a whole lot of that yet, and this isn't going to help. So this may just kind of kick the can down the road here if this is what's going to happen. Biden will speak regarding gas prices and Putin's price hike. That's what it said on his schedule at 1 p.m. Central Time today. In additional energy news, Biden is likely to meet with the CEOs of oil companies this week in order to discuss ways to increase production capacity and reduce fuel prices. Of course, there's two sides to this story that each side would argue. Biden's going to argue that, hey, you guys have earned record profits as of late. You've got to, look at ways to cheapen fuel prices and increase output. The oil companies are going to come back and say, hey, you cut our legs out from under us with these new policies when you got into office. We have no financial incentive whatsoever to increase refining capacity, that sort of thing. It'll take years. It's just not something that's possible. So this is going to continue to be an issue, I think. The cattle market was marginally lower in live cattle and higher in feeder cattle yesterday. The feeder cattle market liked that lower corn trade. Cash cattle, USDA reported a little bit at like 138.5 in the South, not enough to establish a trend, I don't believe. The outside markets, the U.S. dollar is about flat. The S&P's down 50. The Dow's down 343 under some pressure. Crude oil is down $4.64 at 102.70 in the September WTI is what I've got on my screen. And I've seen that pressure attributed to this gasoline tax holiday. I don't know why that would be bearish. The other thing is that I think there's just general concerns regarding a slowing economy here. Everybody have a wonderful day today. I'll talk to you guys same time tomorrow.